Macroeconomics. This part will be presented by Gunter Deuber, RBI Chief Economist and Global Head of Research, and Stanislav Murashov, Chief Economist, Raiffeisenbank Russia. Gunter Deuber has joined us from Vienna, and Stanislav Murashov is here in studio with us. Good morning, dear colleagues. So what do the figures tell to us about Russian economy?
Good afternoon, colleagues. This is Stanislav from Moscow, and I think we have online the Gunter Deuber already. Gunter, can you hear us?
Good morning. Hi, Stas. Hi, colleagues. Hi, clients. Hi, partners. Welcome.
It's nice to see you here. Well, and I suggest that we start our brief update on the Russian economy. We actually have here the situation with the Russian GDP development. Well, I suggest that, the results that we currently have are rather optimistic. Russian economy did well against the backdrop of, rather notable fiscal support, this anti-COVID support in 2020 and this year. And also, there was a good impact of the favorable exports conditions. So we have non-oil and gas export prices at multi-year highs. I suggest that everything goes well as of now. We now see that Russian economy has a good prospects to reach levels of growth, close to 3 to 4% even this year. Though, we expect that our economy is going to shift to closer to potential levels in 2022 against the backdrop of this fiscal normalization. What's the situation globally, Gunter? Can you elaborate on the topic, please?
Thanks, Stanislav. So I think what is very important to the Russian economy is that we are seeing the global economy in a very strong cycle this year, also next year. You see in the Euro area and the US, we are having GDP growth rates of 4, 5, 6%, and even 2023 grows above potential. This is the strongest growth we have seen in decades for developed markets. This showed bode well for commodity prices and also external demand for the Russian economy. And we think this is also a good window of opportunity to launch maybe some of the reforms in the Russian economy we are all looking for. But the external demand is solid, and I think this should bode well for the Russian economy going forward. This is a well-staged and very solid global recovery.
Oh yes, this the window for reforms is always a good opportunity. Though as of now, we see that we have also the spillovers from this side effects from the current fiscal support. We have actually a situation where inflation actually went up against the backdrop of this heated demand, and now we see inflation at the multi-year highs actually. As you can see on this graph, the CBR is actually started its tightening cycle to combat inflation, now it isn't over yet actually. So we expect it to continue this year, and to the key rate we expect to reach 7%. We'll wait and see what's going on, and this is an actually extraordinary situation for Russia, where usually inflation was triggered by the FX depreciation. Now the situation is different, but is the situation in Russia concerning inflation and monetary policy matches the global trends, Gunter?
Up to a certain extent, yes and no. We have an inflation upshoot also in developed markets, but here we have a lot of one-off factors at play that should at least partially normalize next year. That's why also developed market central banks are still more cautious in terms of normalizing their policy. Also, in the US, there's a little bit of more broad-based inflationary pressure building. We see the Fed moving into a certain tightening next year. So I think it made perfectly also sense for Russia and for the CBR to buy maybe also some policy space here from front-loaded and early rate hikes. Yeah. And as we will discuss later, this is also very positive for the ruble from our understanding. Just to put it in the context, we have seen in global emerging markets maybe 50 to 100 basis points rate hikes on average up to now. In Russia, we are already above 250 basis points, and we expect a little bit more. But it's a prudent and front-loaded policy, and thinking about local factors and global factors, this is a prudent approach from our understanding.
Yeah, well, despite all the vulnerabilities, well, concerning the ruble side, well, it remains rather stable. Well, it keeps the trading narrow range at about 72 to 74 USD ruble. Well, that's a pretty good result because usually the ruble remains rather volatile in Russia, especially in terms of crisis. And well, we now see that, well, locally there is a balance between the exports, the favorable exports, and, well, the slightly negative impact of the fiscal rule and the situation with the sharp recovery of imports. But there are also global drivers for the local FX market. Gunter, maybe a few words about that?
So on the one hand, as you see here, the Russian ruble is performing fairly well compared to global emerging market currencies. This has to do, on the one hand, with the interest rate cycle we discussed and the very prudent CBR approach. On the other hand, there is a lot of concerns about debt levels, debt sustainability in the global emerging market space. And I think we are well aware of the very prudent overall macroeconomic framework in Russia that is also now playing out well. And definitely Russia is not affected by these concerns. And this is boding well for the ruble. And on the other hand, we see that all investors that are in the Russian market now are well aware and well familiar with the sanction risks, and they don't panic if we have one or the other news flow once again out of this angle. But the Russian ruble performing very well in the EM context, driven by the interest rate environment locally and the very prudent macro fundamentals. But we touched upon sanctions, and maybe we can briefly elaborate a little bit more on that one on this slide here. Because here you see the exposures of international banks, Western banks towards Russia. The 2014-15 events led to a substantial exposure cut. So international exposures towards Russia by international banks dropped from roughly $250 billion to a level of 100. But you see, since then, exposures are stable. So all the dedicated players in the market remained, adjusted here and there the business model, a little bit more gearing to local financing. But you see, the dedicated players are navigating the sanction environment pretty well. They're in the market, and at least our take is that there will be no external deleveraging, something else coming from the sanction side. We see Russia and the US in a sort of certain equilibrium currently, and if we don't see any major escalation driven by Russia, we wouldn't expect any crushing effects on the US side. So you see international players and also RBI and its friendly competitors on the market adjusted well to this environment, while maybe some of the niche players left the market. But on the other hand, we have to stress these exposure levels are modest. So we have a decent risk management approach by Western banks. So the exposures of Western banks towards Russia is more or less at the same level of the exposure such banks have towards a country like Slovakia, Czechia. So there is a market presence, but also, well, in terms of risk-taking capacity, calibrated.
Yes, thank you. Well, in summing up, well, we see that now, well, there's, well, not much negative events, impacts concerning the Russian economy. Well, it does rather well, and, well, it actually outpaces the expectations. We see now the good, solid prospects for growth for this year. Well, not bad prospects for the next year. We see that, well, the situation with monetary policy is rather manageable. Well, any closing remarks, Gunter?
I think from a risk perspective, we are doing fine in the Russian economy, as I mentioned, based on the policy successes in the past. And I think that adds to confidence also among international investors. And I think this is a major story. Even we will see one or the other slowdown or more cautious GDP print going forward. But we are confident that international investors that are in the market are confident in the market.
Thank you, Gunter. Well, I think we are done now, and, well, we are open to your questions. Thank you very much.
Stanislav, Gunter, thank you very much for giving such a deep dive. As I already mentioned, our conference is interactive, and we do have a question from our viewers and listeners. I will address to both of you. So, you suggested this would be an optimal time to initiate reforms in Russia. Sorry, this sounds illusory. Why do you believe there would be interest in this on the part of regulatory authorities, regional federal officials? Sounds like a skepticism. What do you believe, guys? What do you think, guys?
Well,
Maybe let me briefly answer from an international perspective, because given the turn we see globally in terms of policy preferences, the ESG turn, the turn to be maybe more effective in managing natural resources, will have a huge impact on Russian export capabilities. So I think this time around there is a very big self-interest in terms of maybe adjusting here and there to remain in international markets and to secure certain cash flows. So it's not just about cosmetic reforms, it's about staying in the game, and that's why I think the situations may be a little bit different than a few years ago.
Okay, so I have also a question, and probably to Stanislav. So you were talking that Central Bank of Russia is increasing actually key rate, but it should be come time when Central Bank of Russia will start to soften its policy. So when it will happen?
Well, thank you for your question. Definitely, this is the point that we are confident, because, we have in our forecast that, the easing cycle will restart in the second half of 2022. Well, the main factor is that the inflationary pressure will fade away, actually, on the backdrop of the fiscal consolidation and the stabilization of the global prices. I think that will sooner or later come, and, this will be the main trigger for the CBR to moderate its policy, because now the level of the key rate is considered to be higher than the neutral. So, sooner or later they will come to this neutral level of about 6%, and this will come, according to our forecasts, in the second half of 2022. Thank you.
Okay, thank you very much, and we hope that the growth of economy will accelerate. So, with all these steps. Thank you very much, Stanislav, Gunter, for joining us. And we move to the next part. And so this will be actually...
Just a small remark from my side. I see that there are some other questions coming in online format. Our speakers will respond to them in online, so that all the questions will be addressed by our speakers. Sorry, Maria.
Thank you very much.